As far as investing in stocks is concerned, and as far as you want to achieve a stellar returns, enhanced returns, performance in the stock is equally concerned, it's necessary you understand the concept of a market capitalization, because that will then go a long way in influencing your overall investment strategy. When we talk about market capitalization, I'm making reference to the share outstanding of the company multiply by the current stock price of that company. In a case where a company has, let's say, a billion share outstanding, a billion unit of shares outstanding, and the share price is, let's take for instance, $10. So you multiply $10 by 1 billion, that will give you $10 billion. So that $10 billion represents the market capitalization of that company. It's important we take note of the market cap of the company we intend to invest in, because this will then eventually influence the behavior of the company under different market conditions, under different level of capital injection by way of buying of stocks and by way of selling of stocks, because the share outstanding will then go a long way in determining the response of the stock price to a huge level of money coming in, through a buy order, and a huge money and a huge, level of money coming in, when going out when it comes to selling the stocks. That would then go a long way in influencing how the stock price would then behave. And so, number one, I want to talk about small cap stocks, that is, small capitalization stocks. By definition, actually, these are companies with a market capitalization typically between $300 million to $2 billion. So all companies listed in the exchange that has a market cap, between 300 million, to $300 million to $2 billion. Every company under this particular class is classified as small cap stocks. And what exactly are the characteristics of small cap stocks? They have this high growth potential. They have a higher than normal potential for growth. They can grow at a faster pace compared to higher cap, or large cap stocks. So they grow at a faster pace. And not only that, they are more volatile. In other words, they fluctuate a lot. They are more volatile. And not only that, they have a higher level of risk. They are relatively risky or riskier compared to other categories of stocks. And apart from that, they equally have what is called lower liquidity. In other words, it might be difficult to buy or to sell positions in the typical small cap stocks. So they have high growth potentials, they are more volatile, they have a higher risk, and they have lower liquidity. And so what seems to attract them to investors is they often attract investors seeking higher returns from emerging companies. Typically, these are stocks of emerging companies, and they provide that higher level of returns. And so if as an investor, your priority is to obtain higher returns in your investments, then of course you should be investing in a small cap stock. The next one, number two here, is mid cap stocks. When we talk about mid cap stocks, we are making reference to companies with a market capitalization between $2 billion and $10 billion. So all companies within this particular range are classified under mid cap stocks. All right, that's a mid capitalization stocks. So what are the inherent characteristics of companies in this particular category? Number one is that particular balance of growth and stability. They grew, though not as much as was obtainable in small cap stocks. They grew and at the same time have a decent level of stability, growth with stability, though lower growth anyway, but that growth comes with a reassuring level of stability. And they equally have moderate volatility. They don't fluctuate as much as what is obtainable with small cap stocks. And not only that, they have stronger financial position. The fundamentals are quite solid compared to small cap stocks. You look at their balance sheet, their income statement, the cash flow statements. These financial statements are quite solid. They are very strong compared to small cap stocks. And so, what is the investor appeal here? They are suitable for investors looking for growth. Number one, with less risk than small cap stocks. Investors who want growth, but that growth should come without the risk associated with small cap stocks. So if this is what you are looking for, then you should invest in mid cap stocks. All right. There's decent growth, there's stability, there's less volatility, and not only that, there's less risk. The third category is large cap stocks. Large cap stocks. That's large capitalization stocks. And by definition, these are companies with market capitalization above $10 billion. They are very big companies, huge companies. And so what are their inherent characteristics? Number one is these are established companies, blue chip companies, big companies, strong companies, actually. And they have stable, predictable earnings. They've existed for years. They are popular. They have reputation for strength, for growth, for stability. And not only that, they have lower volatility. They're not as volatile as small cap stocks. And they are less volatile than mid cap stocks. That is it. And they have higher liquidity. Higher liquidity. Just key in your orders. Bam, within seconds, your order is filled. I'm telling you, they are highly liquid. You want to buy very easily, key in your buy mandate. Within seconds, your order is filled. You want to sell, key in your sell mandate. Within seconds, your order is filled. No pending order, no partially filled order, no. Because they are highly liquid. Why are they highly liquid? Because they have sufficient shares outstanding. They have a huge volume of shares outstanding. And so what is the investor appeal here? They are preferred by conservative investors. seeking steady returns and dividend income. Of course, most of them do pay dividends. Some of them are dividend aristocrats. They pay dividends yearly. They don't fail to pay dividends. So you are looking for dividend income, steady income, and at the same time, you you admire stability, and you are a conservative investor who want to preserve your cash, who want to preserve your investment, then large cap stocks are for you. Let's highlight the key differences between these categories. Number one is when it comes to risk and volatility, you discover that small caps are riskier and more volatile, while large caps offer stability. Small cap stocks they are riskier, they are volatile, they are more volatile, but the large caps are really stable. They offer stability. When it comes to growth potential, you discover that small caps have a higher growth potential, though at a higher risk anyway. They have higher growth potentials, while large caps grow at a steadier pace. Not as high as that rapid growth is not really there, but they grow at a steadier pace. Then, in the area of liquidity, large caps have greater liquidity, making them easier to buy and to sell. So there's no issue of illiquidity here. They're highly liquid. Then, when it comes to investment focus, small caps suit aggressive growth strategies. You are looking for aggressive growth. Assuming you can bear, you have the risk tolerance, then you could go for small cap stocks. Large caps fit conservative income strategies. You just want your income coming in, your dividend coming in, there's stability, there's less volatility, there's predictable returns. Then you go for, large cap stocks. So understanding these differences help investors align their portfolio with their risk tolerance and investment goals. You need to understand this concept, this category, so you can align your strategies with your goal, your investment goals, as well as your risk tolerance, and even your time horizon. So you consider all these, take this into consideration. It will be of real help to you to be able to perform, better at the end of the day as an investor.